Hello, this is Matt on the Moon Lambo channel. Okay, I think this is going to be a really interesting video. I've got a chart analyst that is talking about the concept of the Bitcoin halving and what that has on XRP's price and the time frame for associated with this concept. So I'm going to run through that because it's on a chart. You can see last time there was a halving, XRP price, it shot up like 8 months afterwards. So I'm going to share with you the theory on that. I'm also going to run through, because some might want a quick primer on what this is, or a quick refresher, maybe that's a better word, on the Bitcoin halving, exactly what it is and what has happened historically, to just to set the table, put everything in context. Then I'm going to share with you the chart analyst's opinion as far as how that's going to affect XRP price. And then I'm going to wrap up the video with this piece from Daily Hodl, titled JPMorgan Chase Pins Bitcoin Price Plunge on Backed and Bitcoin Futures. Now, before we get rolling here, if you would please delicately tap that like button, and if you're a fan of Ripple and XRP, go ahead and subscribe to the Moon Lambo channel. This is an XRP-centric channel. And so, even though we are going to be talking a bit about Bitcoin, it's always in the context of XRP, at least certainly for this video. I'm always looking at the bigger picture here. So here's the flat-out truth. The price of XRP is tethered to Bitcoin whether we like it or not. It can go through long periods where it can appear to not be the case. Think about 2017, it looked to be untethered for half a year, and then it moves in lockstep the vast majority of the time if you just zoom out on a chart. So the page I got open right here, bitcoinblockhalf.com. So the next halving is happening in 228 days, 2 hours, 8 minutes, and 10 seconds, 9 seconds, 8 it's counting down. So it's coming here. So take a look at this piece. Now this piece is not brand new, but it's not that old. This is from May 10th of this year. It's a piece from Forbes, written by Mo Adham, okay? And it's titled, "What Will the Next Halving Mean for the Price of Bitcoin?" And so I read through this before recording, and I want to jump down because I don't want to read the whole thing to you, but there are major parts of this that are rather substantial, and I want to get everybody caught up to speed. Okay, so let's jump down here, all right? So every 10 minutes, a block of Bitcoin transactions is solved by miners and added to the Bitcoin blockchain. This is complicated and expensive work, demanding a lot of electricity and specialized hardware. So why would anyone do this in the first place? Because the algorithm rewards miners with new bitcoins, which are generated and added to the circulating supply every 10 minutes. This distribution of new Bitcoin is known as the block reward. When Bitcoin first appeared, the block reward was 50 Bitcoin. This means that every 10 minutes, somebody, somewhere, was getting 50 Bitcoins delivered to their wallet. This was back in the days when Bitcoin was worth pennies, and you could mine it using only a laptop. Oh, man, I really wish I had not missed out on that. I was not aware Bitcoin existed back then. So anyway, so does this mean money is basically falling from the sky on those people running giant warehouse-sized mining rigs? Yes, but they're not earning anywhere near as much Bitcoin for their efforts. Currently, the block reward is only 12.5 Bitcoin. What happened? The block reward was cut in half twice. This is a feature programmed into Bitcoin and occurs every 4 years, which is every 210,000 blocks. Once that number is crossed, the block reward is cut in half. This process is predetermined and will continue until the last Bitcoin is mined sometime in the year 2140. Whoops, I just accidentally opened something I didn't mean to. Close that out. Sorry about that, guys. Anyway, so yeah, sometime in the year 2140, right. Why did I read that weird? Did I say 2,140? Nobody reads years like that. What the hell? Come on, Moon Lambo, get with it. Anyway, this process is referred to as a halving, and it can have long-term effects on the price of Bitcoin. It's set to happen again about 1 year from now. And again, this is from May. So how halving affects the price of Bitcoin, the block reward halving tends to have long-term positive effects on the price of Bitcoin. Why does this happen? There are a lot of theories, but one common one comes down to simple supply and demand. If fewer Bitcoins are being generated, the newly increased scarcity automatically makes them more valuable. But this doesn't happen right away. For a more nuanced explanation of why halvings correlate with eventual price changes, one needs to examine the role of miners. On average, 4,380 blocks are mined each month and added to the Bitcoin blockchain. As of this writing, the block reward is 12.5 Bitcoin with a price of around $5,000. I think I can jump around a little bit further. They're just talking about the total value of a given month here. So anyway, when this occurs, the halving, one of two things will happen. Miners will simply give up, or they will refuse to sell Bitcoins generated at a price below $10,000, otherwise known as hodling. So how has this played out in the past? And this is where it starts to get real interesting, I think. And then we're going to jump into what it'll have to do with XRP. Okay, history shows us that it ends up being a mix of both. Some small miners indeed give up. Did I no, yeah, some small miners indeed give up, while the majority will instead choose to keep mining and hold. The first halving occurred in November 2012, when one Bitcoin went for around $11. The following year, the price began to climb dramatically, reaching a new all-time high of over $1,100 in 2013. The price then crashed down to the $220 to $240 range, where it would remain for the next few years. The next halving occurred on July 9th, 2016. Bitcoin stayed in the $580 to $700 range for several months before slowly rising toward the end of the year. This time, some in the industry anticipate that history might repeat itself. Investors remember what happened in 2017, don't they? And so, using CoinDesk data, I analyzed Bitcoin prices through this April and found that large volatility events seem to occur around 12 to 18 months after each halving. The first time, Bitcoin went from around $11 to around $1,100 and then back down to $220. The second time, Bitcoin went from around $230 to around $20,000 and then back down to around $4,000. So what about the next halving? I'm not in the business of making predictions, but history can have a tendency to repeat itself. It's important to note that with each halving, there were different variables at work. With the first, it was the first time a halving ever happened. No one had any real idea of what to expect. The second time, the rise of Ethereum and initial coin offerings was a new factor that was not happening in 2012. The biggest changes in the crypto ecosystem this time around will be the higher public awareness around Bitcoin and the interest of institutional investors. If financial institutions begin taking big positions, it could affect Bitcoin in ways investors have never seen before. Regardless, the main takeaway from today's history lesson is this. There's a clear correlation between Bitcoin reward halving and the price volatility afterward. The supply side changes happen every 4 years, and keeping that in mind can help build a better picture of what influences the price of Bitcoin at different times. Okay, and so, and then I posed a question in the past. So, given that we know historically, because there's been two halvings, that Bitcoin price rockets up in response to this ultimately, is it going to happen the third time? And to me, I don't make price predictions. I want to be clear, no financial background here. This is just, I'm putting a video together for fun because I find this genuinely fascinating, and I'm always thinking about how it affects XRP. But as far as the effect that it'll have this time around, to some degree, and it may just be to a small degree, but I think since we understand that there is this, some people that are savvy are taking out positions sooner than they otherwise would have. So to some degree, it would be reasonable to think that the fact that this is occurring is baked into the price, but I don't think there's any evidence to indicate that it's occurring on some large scale. But I do think some people get it because the knowledge is out there, so it seems rational to speculate that could be the case. But still, I think that once the change in supply hits, it's just going to do what it does, and I don't think that people are they're acting like it's a complete frenzy out there in terms of price action right now. I don't know that people are thinking through this in depth enough. People certainly have not figured out what's going on with this entire asset class. And so you take a look at this now. Here's the part as it pertains to XRP, and I would like to thank Joe Moon, he's at 252 the Moon, for tagging me in this along with some other XRP YouTubers here, Digital Asset Investor and Alex Cobb here. And so take a look at this piece because, man, if this is true, it's kind of like the Bitcoin halving is rocket fuel for XRP. You know, it kind of, if this is accurate. So take a look at it. I mean, the chart's accurate, but if the idea behind this is accurate. So here it is. This piece is titled XRP USD Putting It All Together, and it's by Alex Keaton here on TradingView. And so this is the XRP USD price chart. All right. So check this out. Here's the concept now. The simple story of this whole market is this. Bitcoin's price is tethered to its 4-year halving events, and the whole of the crypto market is tethered to the price of Bitcoin, and so every 4 years we hit new all-time highs market-wide. You can confirm this. Just Google Bitcoin halving dates, choose images, and find many examples, and observe that some number of months post-halving, the price of Bitcoin hits a new all-time high. And again, I just covered this in a Forbes article, legitimate news source, of course, and they reported the same thing. I mean, facts are facts, right? Anyway, and it continues here, and the rest of the market follows. One example is the July 2016 Bitcoin halving. XRP didn't respond until March of 2017. This is approximately 8 months later, with new all-time highs coming months to a whole year after the initial response. As we all should know in the crypto space, the Bitcoin mining reward is cut in half every 4 years. This essentially cuts the newly minted coin supply in half, such that less are coming into the market, and eventually prices respond to this. In this chart, I show 2 of these halving dates, one of which has yet to occur next May. So the theory is that roughly 8 months after a halving event is when we see the whole of the crypto market begin to respond to this halving event. And then sometime after that is when we see new all-time highs. And then you can see this is on response to MPC's analysis of XRP, but I wish to show that the top line of his ascending channel is wrong, because XRP hit an earlier all-time high of 0.061. In early December 2013, 1 year after the November 2012 Bitcoin halving. One can confirm this on CoinMarketCap. I linked to his analysis where he shows a concern of XRP breaching the bottom of his channel recently with the market-wide fall. But if you look at my chart with the XRP December 2013 high accounted for, you'll see that the run-up he is, and the rest of us are expecting, is pushed out to early 2021. So I know, and I'm an XRP holder, of course. I am Mr. XRP Bull, all right? So I understand that we want to see the price get high as quickly as possible and new all-time highs. And people always ask, when Moon, when Lambo? The answer, Friday, 2:30 p.m. No, that's just a stupid joke. But look, I know although everybody does want this to happen sooner than later, it doesn't sound okay. So if the next halving, it's May 20th, right, of next year. So then you push 8 months past that, you're looking at you're looking at the beginning of 2021 for like price movement. If this theory is right, you're looking. That's when the price movement would, in theory, begin. And so people don't want to hear that you have to, because it's 2019 now, that people don't want to have to hear that they have to wait to 2021 to get to the all-time high. And I don't know if you'll have to or not. I don't make price predictions here. But if this is right, I'll tell you from my perspective, that doesn't sound like the end of the world. That doesn't sound too bad to me. If we're going to see the types of asymmetrical returns that we've seen in the past, cool. I'm happy to wait another year and a half or whatever to see it start to move that direction. I'm going to be here reporting on XRP every day. So that's my stance. But you can see here, it's like the first halving. If I can move this chart over, when the first halving occurred, like XRP didn't exist yet, or at least it hadn't been released. Maybe there was still being put together and tested and closing, but because that was November of 2012, and so I think it wasn't until technically the very beginning of 2013, if I'm not mistaken, that XRP was out into the wild there. So we only have really this one Bitcoin halving as an indicator for what it does to XRP, but it also did this largely for the rest of the market. Not down to the day or the week or month or whatever necessarily. But if you look where I'm circling around on the chart here, so there's the Bitcoin halving and the second one ever, and then just look, there you go, about 8 months later, bam. So XRP price did indeed rocket, and it's an interesting theory. There's so many other factors occurring. This could be one of them, because look, the Bitcoin price is going to be affected first in terms of the supply and demand. Of course, that's how people are going to react, and then as more because think about what it does. If there's less Bitcoin, there can be more of a price frenzy. More people will hear about it. More people enter the market, and then more people would start potentially buying other cryptocurrencies, including XRP. So that could be part of it as well. And we just have to see if something like that happens again here. But I am going to be super duper patient, because even though it'd be super cool if the next all-time high happens sooner than later, I am a patient man, and I will outweight everybody. That's my whole plan. Let everybody else capitulate, and then Moon Lambo's just going to be sitting here and be like, okay, cool. And then eventually, I know what's going to happen. Utility will win the day. That's my entire investment thesis. And that's firmly what I believe anyway. So I think it's all coming. To me, it's all just a matter of time. And I'll say this confidently, even though I don't know exactly how things are going to pan out. I have a high level of confidence that the Bitcoin halving is going to have a substantial effect on the entire market. I think it's fair to say that, and if it doesn't, then it's the first time ever. But I think it's fair to speculate that will indeed be the case. So we shall see here. I'd be very interested to hear what you guys think on the topic here. Interesting concept, but eventually, I don't know they would always be like this, because there's going to be halvings roughly every several years, but eventually, as the asset class matures, XRP will at some point decouple from Bitcoin in terms of price action, and then I don't know if it's gonna matter so much. I would perhaps not. We shall see. XRP will just eventually be doing its own thing, because I believe it's going to have staying power for the long haul. I think I found something special on XRP, and if you're listening to this, I suspect that you feel the same way. So, again, there's no price prediction attached to this model here, but again, if you're looking at the way in which the Bitcoin halving affected XRP in the past, if you buy into the theory, it should be to a much more substantial degree next time, one would think, if it goes away. So I've said many times, even though I don't make price predictions, I don't believe for a moment that the all-time high of $3.92 that you can see if you hop on Live Coin Watch for XRP, I don't believe for a moment that is the highest price XRP will ever end up being. Not at all. But that's just my everyday Joe Schmo opinion here. Check out this last piece here. JPMorgan Chase pins Bitcoin price plunge on Bakkt and BTC futures. Bitcoin suffered its biggest 7-day drop since November of 2018 after plunging this week from 10,198 to 7,926 by Thursday. Strategists at JPMorgan Chase point to the tepid launch of Bakkt, the Bitcoin futures platform from Intercontinental Exchange designed to onboard Wallet Street investors. I didn't catch that last time I read this. Onboard Wallet Street investors. This is crypto media, guys. They mean Wall Street investors. They wrote Wallet Street investors, but like I keep saying, man, just if you're in crypto media, you write up your piece. Make sure you do not check it for inaccuracies. This one, I guess it wouldn't even bring up the squiggly lines because wallet is indeed a word. But yeah, don't go ahead and read through it for content errors or grammatical or sentence structure or anything. Just go ahead and type it up and put it out into the world and make everybody deal with that. Mediocrity, the best friend of crypto media. Mediocrity. While JP Morgan's strategist lead, Nicolaus Peng, I'm not even going to try that name, characterizes Bakkt's launch as a sign of maturity for the crypto industry, he notes in a report dated Friday that it probably depressed prices, reports Bloomberg, and here's a quote. It may be that the listing of physically settled futures contracts that enable some holders of physical Bitcoin, e.g. miners, to hedge exposures, has contributed to recent price declines rather than the low initial volumes. And then the piece continues, JP Morgan's analysis of Bitcoin's latest performance tracked the impact of the Bitcoin futures market at large and a more marked capitulation of Bitcoin longs on BitMEX. And here's a quote now. This position liquidation has also likely contributed to the sharp falls in Bitcoin prices this week. While the previous overhang of long Bitcoin futures positions appears to have cleared in BitMEX futures, this is not yet true for CME contracts. So you can take that for what it's worth. I've covered this a little bit in recent days. And I tend to think that in terms of adoption, with what Bakkt's doing here, they seem to be confident that it's just going to be a matter of time. And there were reasons I previously cited. I don't recall them off the top of my head. It doesn't really matter. But in terms of the development of this part of the space, it's just something that's actually, even though active, still kind of being built out. And so they, at least putting on a brave face, saying, hey, we kind of expected this and it's okay. And eventually there will be more adoption, and they seem to be very confident. So we'll see. Take it for what it's worth. That's it for this video. I am not a financial advisor. Do not buy or sell anything because of anything that I say or write. That would be a very, very, very bad idea. Until next time, to the moon, Lambo!